Welcome to Tax Teach. I hope you're all having a great day. My name is Sean. I'm a certified public accountant specializing in taxation. And today I want to talk about the Gamestop story. I'm giving you all a brief background about the story and also talk about tax considerations you should have when you sell stocks. The GameStop story begins with a couple hedge funds thinking that the price of GameStop stock was too high, and so they entered into a short position. And what a short position is basically is they're betting on the price of a stock to go down. And if the price of the stock goes down, they make money. A couple Reddit users found out about these hedge funds entering these short positions, and so they decided to tell fellow Reddit users to actually buy the GameStop stock in an effort to increase the price of the stock. And so this went viral, and a bunch of Reddit users bought the GameStop stock. And so the laws of demand, say that if something's in demand, the price goes up. And so the stock price of GameStop went from $18 all the way up to $480. And that's like around 2,500 increase in value. And so when the hedge funds went to close out their short positions, they lost billions of dollars because they bet that the stock price would go down when in fact it went up, over 2,500%. And so that's the background of the GameStop stock story. And I wanted to talk about the tax considerations you should have when you sell stock. So this is in the perspective of maybe, one of you all who bought GameStop stock and then it went up in value. And so you made a bunch of money. And I want to talk about the tax considerations that go into selling stocks. So anyways, let's get into the tax considerations. First things first, generally speaking, you're not taxed on any stock gains unless you sell the stock. For example, let's say you own a stock that's $10 in value, then throughout the tax year it increases to $20. That $10 gain is not taxable unless you sell that stock. And the same goes true for the other direction. Let's say you own a stock that is $20, and then throughout the tax year it decreases to $10 in value. That $10 loss you can't take in your tax return unless you sell that stock. So let's say you do sell a stock. There's two possible rates that your stock might be taxed at. The first is short-term capital gains rate. And what that is if you hold a stock for less than a year, you're going to be taxed at the short-term capital gains rate, which generally speaking is going to be your typical normal tax rate. So if you're getting taxed at 27%, normally, then your gain on your stock is going to be taxed at 27%. For most people who own GameStop stock, that's probably going to apply to you since you own the stock for a couple days, maybe a week, and then you still sold the stock. So any gain on that stock is going to be taxed at short-term capital gains rates, which is going to be your normal tax rate, whatever you are at. On the other hand, if you own a stock for a year or longer, it's going to be taxed at long-term capital gains rates. What that is either 0%, 15%, or 20% depending on your taxable income. If you're single and make under $40,000 in taxable income, any gains that you have on your short-term or on your long-term capital gain stock is going to be taxed at 0%. On the other hand, let's say you're at the highest tax bracket, which is 37% in the US. If you sell your long-term capital gains, any long-term capital gains you have, it's going to be taxed at 20%, which is quite a big difference compared to the 37% that you're normally taxed at. And you can see if you had thousands of dollars in long-term capital gain that you're going to save thousands of dollars if you hold that stock for a year or longer. I hope that was helpful, just comparing short-term capital gains versus long-term capital gains. And one comment about people who own GameStop stock is just to be prepared for when you prepare your 2021 tax return, because you're going to owe more taxes because of that large gain on that GameStop stock. So just plan to pay more taxes and plan accordingly. Anyways, that concludes the video. Thanks for watching. If you found the video helpful and informative, hit the like button. It lets me know that I'm creating enjoyable videos for you all. And if you haven't already, it'd be awesome to see you all subscribe to my channel. It's free, and then it just keeps you up to date on videos I make in the future. So take care all, and I'll see you next video.